Welcome to our third session of the day. So now we've looked at remember the two major topics that we've done this year is the income method of valuation and the cost method. We are done with the revision on the income method of valuation. If I could repeat myself, please, let's know the income method of valuation, the theory as well as the practical applications of the income method of valuation. Extremely important. The next topic of discussion or revision basically is now the cost approach to valuation or the cost method of valuation, depending on whatever you want to call it. So the cost method of valuation, first and foremost, I think before we even look at the details of the method, you need to know exactly, like all methods of valuation, you need to know exactly when do you use which method and how do you go about using that method. And I keep saying always, the whole subject of property valuation is about knowing the methods of valuation. That's why we talk about methods of valuation from first year. Now we are talking about methods of valuation, and next year we are going to be talking about methods of valuation. Because basically it's all about valuing property. So how do you go about valuing property? It's about knowing now the correct method to use to value a property. So what is now important is for you to know exactly on what type of property do you use this method of valuation, and then how do you go about using this method of valuation. Okay. So the cost method of valuation, if you look at my heading here, I'm deliberately calling it the cost approach to valuation, because there is a big argument, a big debate out there to say whether the cost method is a method of valuation or it's just an approach to valuation. Because if you look at, start from the beginning, if you look at the definition of market value, what is market value? So market value is basically the price, estimated amount a person would pay, simply speaking, is the price that somebody will pay for a property. That's the market value. So now, in the cost approach, when do you use this method? Theoretically speaking, you should know you use the cost method to value those properties which are rarely or do not sell in the open market. So basically, we are using this method to determine a market value for a property which does not have a market. Yes. That's why it is sometimes other people say it's not a method of valuation, it's just an approach to valuation. So basically, as a principle, you use the cost method to put a value on those properties which are not sold or which do not exchange hands, where you will not find a willing buyer and a willing seller. Okay. So then, how do you go about that, determining that value? Because there is no market. Remember, in all valuation, the most authentic and sure proof and convincing approach to valuation, to determining the market value of a property, is the comparable sales method. Because that method relies on other sale prices or other prices which people have paid for similar properties. So in this cost method now, you are asked or you're required to determine a value for a property which nobody has ever bought before or which people don't buy. But that as it may, you are still required to determine their value. So because of that complexity, that's why now the value of that property which is rarely sold in the open market is going to be determined by how much it costs to construct it. And that's why now this is the only point or the only method where now the value of an item is equated to its cost. Otherwise, strictly speaking, cost is not equal to value. Two different things. Cost is not equal to value. However, in the cost method of valuation for those types of properties which are rarely sold in the open market, then cost is equated to value. That is the only exception. So that is, I think, the opening remark, which is basically covered, I think, in most of my other presentations. But that is the general overview of the cost method of valuation. So in determining the cost method of valuation, you need to know certain key important terminologies. Know these four important terminologies. Know what a replacement cost is. Know what reproduction cost is. And know the effective age of a building. Then know what depreciated replacement cost of a building is. These are potential exam questions. You should define for me a replacement cost of a building or depreciated replacement cost of a building. So replacement cost is used to determine the cost of the new building. If you are valuing a building, a newly constructed building, it's new. So you are basically going to calculate how much it costs to construct that building. So you are going to take that replacement cost as the value of that property. If you are valuing an old building, you are going to take the replacement cost of that building, then you depreciate it based on the condition of the building. And what you get now will be your depreciated replacement cost. That's the difference. So the replacement cost, you use the replacement cost method to value new buildings. Whereas for old buildings, you use the depreciated replacement cost. So you calculate the replacement cost of the building, then you deduct the depreciation. So when we talk about depreciation now, depreciation is mostly in building is based on the age of the building. So now that is the most confusing aspect of the cost method of valuation. If you are valuing a property which was built, say, 20 years ago, so the chronological age or the actual age of that building is 20 years from the time it was built to your date of valuation. That period is what they refer to as chronological age. Now we know that the condition of a building does not always depend on how old it is chronologically. The condition of the building is dependent on the maintenance. So a building which was built 20 years ago, if it is properly maintained, it can look as good as a building which was built yesterday. Exactly. So what date, what age do you use when you are calculating depreciation for a property? That is basically now where the concept of the effective age comes into play. So the effective age now, that is the age of the building based on its condition of maintenance at the date of valuation. So when we are calculating depreciation for that property, you are not going to take the actual age of the building. You are going to take the effective age of the building. So please, let's know these important four terminologies, extremely important. Replacement cost for new, reproduction cost, that is when you want to recreate the building and to an exact duplicate of its former, using exactly the same materials. That's reproduction. Effective age, that is the age of the building based on its maintenance condition. And then depreciated replacement cost, this is used for old buildings. That is now the replacement cost less depreciation based now on its maintenance condition. And to calculate the depreciation, you use the effective age of that building. Okay. So I've already given that introduction. Basically, that's what I was talking about, the rationale of this method. So in this method, this is the method that involves two processes. You're going to value the land separately and then the building separately. So the combined value of that building is going to be the depreciated replacement cost if it is an old building, then plus the value of the land. This is basically the rationale of this method, is that any informed buyer will not pay more for a property than it would cost to buy the land and build the structure on it. Yeah. So basically the cost method is the method which involves two methods. One for the land and then one for the structure. You value those two things separately. Then the total value of that property now is going to be the sum of the land value and the value of the structure. Okay. Then you need to also, just as a reminder, please, let us know the three different types of depreciation. Economic obsolescence, functional obsolescence, and physical depreciation. I've been singing that song, I think, the whole year. And you should be able to give me different examples of those three types of depreciation. Yeah. Physical, functional, and economic obsolescence. Okay. So how do you go about valuing property using the cost method? That's the procedure. Firstly, estimate the value of the site as though vacant. There is, I should say this, there is really no standard process as to what do you need to start with when you are doing evaluation. So what this procedure basically, the order does not matter. You can start with whatever you want to start with. Otherwise, what is important is all these factors need to be considered in the evaluation. Okay? So you need first to estimate the value of the land. And how are you going to estimate the value of the land? You're using the comparable sales method. The trick is also always, there is a trick also in that first bullet. If you are saying you're going to value the land using the comparable sales method, and here we are saying you're valuing a property which is rarely sold. So which comparable are you going to use for the land? That's the tricky part of the cost method. Yes. So theoretically, yes, you say you value the land based on the existing use, but technically speaking, there's no comparables for that type of property. So what normally happens therefore is you are going to use the land values of the most predominant land uses in the area where your property is situated. If your property is situated in an industrial zone, you are going to use industrial values, land values. If it is situated in a residential zone, you are going to use residential land values. That is the way out. Yes. So that is the process. Estimate your land value based is the existing use as though vacant. Estimate the direct cost. These costs come from your building cost estimates. which is inclusive of the entrepreneurial profits and professional fees. Add those above to get the cost of improvement. The other important aspect of the cost method is how do you determine depreciation of a property. We have done a lot of exercises on determining depreciation using the straight line method. And unfortunately, based on the results of your September tests, most of you could not do that calculation correctly. Please make sure you go and revisit that calculation. You should be able to calculate depreciation using the straight line method. I've given you, it's quite clear, I've given it to you in the notes, and I've given you enough examples within the notes. Please go and revise that. I will test on you. I'll test you on that one again. I like comparing when you talk about the previous topic. We were talking about the income method of valuation. The income method of valuation relies so much on the capitalization rate. The cap rate is a very, very important component of that method. As important as the cap rate is to the income method, so is the depreciation to the cost method. Because the value of that property is going to be based on how much you depreciate it. So if you don't calculate your depreciation correctly, then whatever figure you are going to come up will just be another figure. However, that is the most difficult aspect also of this very method. You cannot estimate the depreciation with 100% accuracy because the figures are just estimates. So that in itself also then makes the whole cost method a method of last resort. It's a method to avoid at all costs. But what is important here on this slide, please, let us all know how to calculate depreciation using the straight line method. Okay. I've given you that example of how to calculate depreciation. That's basically one example. And how to get your depreciated replacement cost. Please go and look at that example. Then, effective age of the building, that is another, like I was saying, it's the age of the building that will determine the depreciation. So you need to know exactly how to calculate the effective age of a building. We've done so many examples. This is one. We did some more examples on our practical exercises as well. But please, I want you to know the concept of effective age. That is the age that you are going to use to determine the amount of depreciation for your property. Okay. So these are now general notes. Basically, these are the notes I think I've talked about this in a nutshell. The cost method is a method of last resort. It's a very, very unreliable method of valuation for any other property except those properties which are rarely sold in the market. So please don't use the cost method of valuation to value those properties where there is market evidence, sales evidence, because it's not a very accurate method of valuation. So when do you use it? Bullet number 2. This method is only used to value specialized properties. And basically specialized properties are those properties which are rarely if at all sold in the open market. Special properties are those properties which are rarely sold in the open market. And what I've put up there are just some of the examples of specialized properties. Churches, public buildings like schools, hospitals, police stations. It's not often that we hear people selling the police building, whatever, police station building. Yeah. Those are specialized developed properties. So then this method,
special zoning.
exactly, especially for the such type of properties. Apart from those type of properties, you also use this method in those places where the market is not well developed, like in rural areas. If you are valuing a structure in the rural area where there is no market, there's no open market, so to speak, or on communal land, you place a value on the house on communal land. There are no direct sales of such property. So, as a last resort, where in those instances where the markets are not developed in such places, you can use the cost method. So one major challenge that is encountered in using this method is how you estimate depreciation, because it's not possible for any person to be 100% accurate on the amount of depreciation. For that reason, depreciation becomes just an estimate, which renders now the whole valuation process also just an estimate. So please avoid the cost method of valuation as much as possible. Only use it as a method of last resort. Okay. So what do you need to do? How do you go about valuing a property using the cost method? First and foremost, just like in any valuation process, you need to inspect the building. Need to inspect the building because the cost of the building, need to inspect and take measurements of the building. Why? Because the cost of every building is based on its size, as well as the condition of construction. That's why you need to know those two things. Know exactly how big the size of your property. You can only know that when you take measurements through physical inspection. Take measurements of every structure that you are valuing. And during your inspection, please pay attention to the following. Take note of the construction type and detail, because the construction type is going to influence the construction cost. Take as much construction details as possible in terms of the construction, the structure, the foundation types, the type of finishes on your property, the roof types. So all in all, take as much construction detail as possible, because these are the things that are going to influence the cost of construction per square meter, the replacement cost. So you need to know that. Extremely important. So that slide is extremely important. Then methods of estimating costs. How do we estimate the cost of a structure? There are different methods of estimating costs. The most professionally accepted and widely used is what they call the quantity surveying method. You know, quantity surveyors are the cost specialists. You know the work of a quantity surveyor? An architect who designed this building Before this building can be built, the developer needs to know exactly how much it will cost him to build that. So then he will pass that building drawing to the quantity surveyor. Then the quantity surveyor will quantify, will prepare what they call the bill of quantities based on the architect's specifications. If the architect says this building there will be cupboards of this type, so the architect, the quantity surveyor now will have to go and look for cupboards of this type to see how much they would cost to install. So now he has now to itemize item by item of the whole property in order to come up with the total cost of construction. That is basically the quantity surveying method. It is the most accurate method of estimating the cost of construction because it's very, very detailed. So that is one method. Then second method is the square meter method. This is the method which now most valuers use. The square meter method. The square meter method is not as detailed as the quantity surveying method. So this is where now the cost of the building is dependent on the size of that building per square meter. And that's where now we are saying it's important that you take measurements of the building because their replacement cost is going to be based on the size using the per square meter method.
Now,
Yes.
that's square meter method. But most of the time, is it higher than the QS?
Good question. Comparatively speaking, I'll be honest with you, I've never investigated that one.
Because definitely,
I think it
they have
could
to
be.
yeah, it could be.
Yes.
So, but then it
Yes.
means their information is always based from the QS.
Yes.
Because they have to make profit.
Exactly. Yes.
Mm.
Comparatively speaking,
Because normally it's the going rate.
yes.
You normally
And this is the most common that we
it's the
find
most common
published.
one.
Yes.
Because
square
normally
meter,
you will
yes.
take your plan to the guy to quote you.
Yes.
And he definitely you will have to go and consult a QS.
A quantity surveyor.
Mm.
Yes.
And then he tops up for
Now I'm thinking.
Mm.
I think the square meter method could be higher than because
Always.
it's inclusive of the
It's
profit
inclusive.
margin.
Yeah, profit margin.
Yes,
Mm.
yes. It is higher than the QS method.
A lot of markups, right?
Yeah, of course. Yes. Yes. So this is the one which most valuers use.
Yeah. So that's how you evade some of the QS cost.
Yes.
And pass it on to the.
Yeah.
Mm.
Precisely. The other method is the cubic method. The cubic method is exactly like just close to the square meter method. However, this one is also becomes important where the height of the building is important. If the height of the building is a factor, then like in warehouses, then you need to calculate the volume, which is L times B times H, height, volume. So the height of the building then becomes important. And then you get the per cubic meter method. Okay, then there is lastly the unit cost method, or sometimes referred to as the elemental method. This is a simplified version of the quantity surveying method. So please let's know these are the 4 common or standard methods of estimating building costs. Quantity surveying, square meter method, cubic meter method, and the unit cost method. Otherwise called the elemental method. Okay. And then lastly also, is it lastly? No, yeah. Let's also know the costs which influence, factors which influence cost per square meter of construction. So you know that construction cost that you are going to get is normally influenced by this whole range of functions. Extremely important, please know that one. The factors which determine or influence the construction cost per square meter of property. That one of those are the factors: location, the topography. Just that is all complete. There are how many are they? 10, 11. Yeah. So very simple, and you can just to remember is just visualize the building and see its location. And how those factors could influence the cost per square meter of space. Okay. So then, where do you get the sources of construction cost information? Primarily, quantity surveyors are the cost specialists. So it's always ideal that you know some quantity surveying friends of yours. They always know the current construction cost of different types of properties or buildings. So they will be of assistance. So apart from quantity surveyors, there is also that handbook, the African Property Handbook, ELCOM. Every year they update the construction costs for all different types of buildings or properties. So that is, I've already uploaded. I don't know how many of you have downloaded that. Have you looked at this?
The book I didn't.
But it's there. So that is another very important source of construction cost information. Yeah. So that's, I think, the overall theory of the cost method of valuation. You use the cost method of valuation to determine the value of properties, those properties which are rarely sold in the open market. Okay, so please, what I expect from you is know the theory of the cost method of valuation in and out, and then know the practical applications of the cost method of valuation. Know exactly when you use this method and how you go about using this method. Okay. So that is the theory side of the cost method of valuation, and that's where I think the theory ends. Do you have any comments?
No.
Straightforward. Okay, switch it off for me.
Okay.
No.
Oh.
Yeah. Okay. So I think we are done with the the theory of the cost method. So now is the practical application of the cost method of valuation. I've given you enough examples on the application of the cost method of valuation. And I gave you a small test using the cost method of valuation. I'm not going to go through this again. Please, it's just a reminder, please go through the class exercise that I've already given to you on how to determine and calculate depreciation. It's all about calculating depreciation. Know how to calculate depreciation of a property. I showed you two methods. One is the straight line method, and the other one is the fixed percentage method. So know how to calculate. Go back to that class exercise. Know how to calculate depreciation and know how to value a property using the cost method. So the value of that property is going to be, if it is an old building, it's the depreciated replacement cost of the building less depreciation, which gives you the depreciated cost, then plus the value of the land, gives you the market value of the property. So if you don't know how to calculate depreciation, then you get the whole calculation very, very wrong. So I'm still repeating myself. You've got a class exercise. I gave you a very simple test in your September test. I think a good number of us got that question wrong. So please go and revise that one. And I also showed you depreciation. There are two methods of calculating depreciation, the long one and the short one. It's up to you which method you adopt. Okay? It is all covered in our exercises. Okay. So that is the cost method of valuation. That's it. And I'm sure there's no question. From there, let's move on now to another very, very specialized type of valuation. Remember when we talked about the purposes of valuation? One of the purposes of valuation, one of the reasons why valuations are done is for insurance purpose. So, to do an insurance valuation, you are going to use the cost method of valuation. So you need to know how to do an insurance valuation. I've given you enough examples of insurance valuation, and I'm very, very impressed that all of us, it's a very, very simple calculation. You just need to know your mathematics well. And I'm quite happy all of us, I think, understand or know how to do an insurance valuation. So the cost method, I've so much been talking about the weaknesses of the cost method. The cost method is only desirable or applicable when you are doing an insurance valuation. There is no any other way to do an insurance valuation apart from using the cost method. So that's why we discuss the insurance valuation side by side with the cost method. So please go through the exercises that I gave you for insurance valuations and practice as much as possible. Okay. So that is insurance valuations. So where are we now? Basically now, in conclusion, this is the revision of things that we already know, and the test, the exam rather that you are going to do is based on exactly the same things that I've been talking about today and stuff that you already know. So if you ask me for a scope, you already know the scope. We've seen it on Blackboard, and it's basically what I've been talking about today. So please just prepare adequately. It's about commercial valuations, the cost method of valuation, then what else? Land use, and general methods of valuation. That's what covers that is what is covered in your final exam. And if you understand those, then I don't in this year. And also, please, those of you that have got the prescribed textbook, read the whole of this text. It's a very small and short, with very short chapters. We've basically covered almost everything in this chapter. So read every section, every chapter of this book. Okay. Those which are very relevant, especially the chapters that we've talked about today. There are additional chapters, chapter 4 and chapter 5. Pay attention to those in addition to everything else that we have done. Okay. So that is the end from me, and I can only wish good luck for everybody, and make sure the rest is up to you. You still have, I don't know how many days. You know when you write in your exam, so it's up to you what you do between now and your final day. If anybody wants to fail and be in this class next year, the choice is yours. Thank you very much. That's the end of my story. Good luck to everybody.
Thank you.
Thank you.